Hey guys, it's Nick, and in this video, I'm going to do an update on the latest with the Hertz bankruptcy saga. Now, I've been following the Hertz saga and been making a lot of videos since they went bankrupt, and I've been warning people not to buy the stock because it's going to be a zero, it's going to be ripped up because there wasn't enough money to pay off the debt holders. That has changed. So in this video, I'm going to give a little history on what's happened since they filed for bankruptcy, and what has changed in the market, in the economy, in the car market that has made them all of a sudden attractive to competing offers from different investment companies. So what has changed in the car rental market so much that these two firms are now competing against each other to buy out Hertz? Number one is the pent-up vacation demand, that people are now coming out for vacation. And on top of that, a lot of them are staying within the US because they don't want to deal with taking PCR tests to leave the country and the possibility of maybe getting stuck in another country if they have to take a PCR test to leave and it comes up positive, stuck there for 2 weeks or whatever. So people are kind of playing it safe and staying within the US. So that extra demand for US vacation increases demand for US rentals. So it's been like kind of a perfect storm, where last year the perfect storm was used car prices plunged, new car prices were going down because nobody was going out shopping, they were staying home. Now it's the opposite. And so with the chip shortages, the car manufacturers cannot produce all the cars that they can sell. So when they have limited amount of cars, they're selling them to the retail buyers top dollar. They're not trying to sell them to the rental cars as fleets, which are usually discounted prices off normal retail prices. So the car rental companies cannot get any new cars to meet this summer demand because they can only buy it at retail, and it doesn't make sense at that price. They can't get the fleet cars. So what are they doing? They're actually going back into the used car market, buying back used cars, which is making the price of used cars go up, along with the people that cannot buy the new cars because there's maybe not enough of them. They're also going into the car market, also bidding up the price of used cars. So here's a story about rental car companies crash used car auctions to find scarce vehicles. They said it's a big change from a year ago when Hertz, Avis, and the rest went lean on inventory to survive the early months of the pandemic. These rental car companies sold off large chunks of their fleet in order to right-size for rental demand. But with rental demand returning, firms can't replenish their operations with new cars because auto factories around the world are missing critical pieces of their assembly lines. We got all of this additional pressure from the semiconductor, seating foam, plastic issues. Noting that rental firms are going out and bidding on used vehicles, that has pushed the prices of used vehicles up 32% since January. So this inflation trickles down to rental rates, which can be upward of $150 a day. So they say they expect the high rates and sky-high used car prices to continue through the summer. So this is why there's this perfect storm for Hertz, where these companies are bidding to buy up Hertz and are willing to pay off all the debt holders and even pay off the stockholders. So now Hertz is up to $3.80 a share. And for those who don't remember, it went bankrupt and filed for bankruptcy. It went as low as like 50 cents. And then it had a surge up to like $6. All these people were bidding it up to the point where for the first time in history, a company in bankruptcy filed to do a secondary stock offering to take advantage of the high price that people were bidding it up to. And the judge in the bankruptcy case originally allowed this to happen, but after a lot of heat and the SEC talking about it and stuff, they decided it wasn't a good idea. And so they canceled that. They were going to sell $1 billion in stock. And this is all the while Hertz was saying it expects stockholders to lose all their money in the filing for selling more stock. So imagine that. They file to sell the secondary offering saying, yes, this thing is going to be worthless, but if people are willing to buy it, we'll sell you $1 billion worth of it or more if they want. I mean, look at this headline: Hertz pulls potentially worthless share offering. So all the financial articles warned people that Hertz is going to be worth zero because they could not pay off all of the debt holders. And so debt holders rank above stockholders. And I did videos explaining the seniority of who gets paid first: the senior bondholders first, then the unsecured bondholders, then the stockholders if there's anything left. In case there was not anything left, as is usually the case with bankruptcies. So the big difference here is because of the change in demand and the summer season demand prices that they can get, now these investment companies see value in Hertz and are willing to pay off not only the secured bondholders, but the unsecured bondholders, and they're willing to even give the stockholders something. So there's two investment groups competing to be the ones to take Hertz out of Chapter 11 bankruptcy. One is Centerbridge Partners, Warburg Pincus, and London Capital. They're one group. The other group is Knighthead Certares. So the Centerbridge group was appointed by the bankruptcy court because they had the best offer, or probably the only offer at the time, for Hertz. But the Knighthead Capital, Certares, and Apollo group came in with a better competing offer. So this offer not only pays off all of the secured and unsecured funded debt, it even provides holders of common stock 50 cents per share in cash and either 10-year warrants for an aggregate of 10% of the reorganized company, or for eligible stockholders, the possibility of subscribing for shares of common stock rights offering. So the board of directors at Hertz determined that the revised reorganization proposal from Knighthead is a superior proposal than what Centerbridge offered. So what's going to happen next is, if the current plan sponsors Centerbridge inform Hertz by May 7th that the current plan sponsors intend to make a counteroffer to the proposal by the KHC group, that's the Knighthead group, then the company will proceed to an auction on May 10th in accordance with the process established by the bankruptcy court. So guys, this kind of thing doesn't happen often. Usually the stockholders get nothing. The bondholders take over the company and stock, as happened with JCPenney, Chesapeake Energy, PNC, and countless others. So this is a really unique situation here. But what can happen here on May 7th or May 10th? May 7th, if Centerbridge puts in an even better offer, then they will go to an actual auction kind of thing on May 10th. Whoever offers the highest and best offer is going to get to keep Hertz. So is there the potential that stockholders will get an even sweetened bid in this kind of dueling auction between these two investment companies? With the craziness that has happened, nothing surprises me anymore. So it's possible. It's not gonna be crazy. Instead of saying 50 cents, maybe they'll say $1. Maybe they'll offer you 15% of the new stock or something like that with warrants. So guys, that's the latest on the Hertz bankruptcy deal. The shareholders weren't going to get anything before. That has changed. Now they're going to get a payout. So if you didn't listen to me before when I said don't buy the stock, it's going to zero, and you're still holding it, congratulations on your gain. And let me know in the comments below if you plan on holding it all the way to the end when you issue new stock, or you're going to sell it before the deal closes. Thanks for watching, guys, and I'll see you in the next one.